What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering your favorite stock once again. I'm going to continue to do SoFi updates every couple of days, and I'm also going to be doing an update in the overall market, what I saw this Monday. On this channel, we continuously preach we do not buy stocks running in the green. We do not FOMO. We always look for discounts in the market. We always buy on red days. That's what we're going to be looking at with SoFi stock because this stock is still at a significant discount compared to other growth stocks with high growth potential. And remember, guys, it's not about timing the market. It's all about time in the market. You can always, time a dip, really good, but can you hold on to that stock that you got for a long period of time? That's when you're going to see the significant amount of gains. And only if you feel this video gives you a better insight on the SoFi stock or the direction that the market is headed, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks. There's going to be a lot of great information coming out. You don't want to miss it. Let's get into the video. All right, guys, SoFi was being very, very sneaky today. It looks like, some of the big money hedge funds, could have baited, some retail investors today. It looks like what happened because we saw a, pre-market, sell-off followed by a, open market initial run-up all the way to $16.06. And then just that, what we've been continuously seeing, that 8-hour sell-off, just nonstop 8-hour sell, slow throughout the day. We've seen this time and time again. It looks like, they could be baiting, to clean up as many shares as possible. But we know this stock is, finding heavy support when we look in that 5-day chart in the 15 range right now. So anything in the 15-16 range is good buying opportunity. Once again, we've been selling off for 5.5 weeks plus, all the way from $23. You can't even, get over to the map after this 4-week chart. This sell-off has been a 5-6 week sell-off. So it looks like we're bottoming. It looks like we're getting very good support around the 15 range. So this is the time to be buying. Once again, I've been telling people I have a game plan. My game plan is pretty much buy every 10 to 14 days in the market, regardless of, any stocks running up. I'm looking for red. I'm looking for discounts. I'm looking for valuation. So I'm pretty much buying every 1 to 2 weeks on a Friday. And that's my game plan. I'm not going to be buying this week and then until Friday. I'm going to look at the stocks on Friday, and the ones that I like, whichever one is, most deeply in the red is what I'm going to be buying. And if these stocks, run up, let's say, for example, SoFi runs up to 18, 19, 20 heading into earnings, I won't buy it. So that's the game plan. Buy every 7 to 14 days. Right now, the valuation still sitting at that 12x sales, guys. And you're going to really like this video, guys, because I'm going to show you multiple growth stocks comparisons on valuations. Okay, I understand that the sectors are not going to be the same. I get a lot of people commenting to me about, this stock doesn't correlate to this stock. Well, in general, I'm talking about valuation of a growth stock. It could be cloud, it could be tech, EV. We're just trying to get what these growth stocks are getting priced in, when you compare 5 to 10 of them. And you're going to be very surprised when you look at how expensive Wall Street analysts are pricing these growth stocks at. And that's what we're going to look at. But right now, we know that SoFi is trading right around 12x sales on 1 billion potential revenue. We have earnings coming up in about 2 weeks. And I believe big money could run this stock up heavy if they see what they like. If they see that they like, what the performance is on SoFi stock, we could see a big run. We could see a 20% run. Could be weird. It could, be a couple of days after earnings. You could see the stock just go crazy. You could see it heading into earnings. You could see it the day of earnings. But I really think there's going to be a big 20% run coming in the next couple of weeks. So be ready, guys. Be buying up these discounts for sure. Before we go into more depth about the SoFi stock, I want to show you exactly what's happening in the stock market today. Two big things are happening, okay? Number one, okay, China crackdown is getting crazy. The government crackdown in China is crazy. Now I'm going to show you right here. This page is companies by market cap. If you take a look, it has the top 100 companies in the world, okay? The biggest companies in the world, okay? There's tons and tons of China stocks listed on here. If you take a look at today's price action and we look at negative price action, wait till you see this, guys. And this is why I recommend nobody to be messing with China stocks right now, because you can have your entire investment ripped out from under you in the blink of an eye, guys. It's crazy what they're doing with these China stocks. Watch this real quick. Take a look. We're going to click to today. Look at this, guys. China, 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 China. These are the 100 largest companies in the world. 15%, 10%, 8, 7, 5, 4. The only stability we're kind of seeing right now in the China market is the EVs, because we've seen that the three amigos, Li Auto, Xpeng, and Neo, they Neo in particular did get backing by the government, so they really like this company. They're very transparent of, what they say. As you can see, these companies are way bigger than Neo, and they're getting smacked off the planet. So that's the biggest headline in the market today, is the China crackdown. I mean, these companies are getting annihilated. Alibaba down another 7%. It's crazy, guys. I can honestly say I own one China stock. That is Neo. I really like it. It's a good growth stock. I think they have a great product, great management. That's the only company I own right now. I'm not buying more of it. I'm not adding. Um, I'm most likely looking to trim if it has a massive run up to like 60, 55, 65. I'm looking to trim a little bit and go back into the US stock. So I'll hold Neo long term, but right now it's just a crazy market win. And the second headline we're going to look at, we're going to go over to bar charts and we're going to look at the big stocks running. And guys, it is crypto. That is the second headline. And it's kind of weird how crypto ran up, right around, earnings. Very weird. But as you can see, the two amigos, Riot and Mara, these are back. Coinbase, 20%, 20%, 9%. So the crypto space is back. Bitcoin's up 10%. But if you take a look at stocks that I'm seeing running, guys, it looks like a lot of people are FOMOing into these, reopening, travel plays, Carnival, Norwegian, airlines, American Airlines, United Airlines, Royal Caribbean. So these look like just a couple of stocks that are running today. The airlines and cruise lines, 4, 6%. I'm not really interested. That's the thing, guys. I don't chase stocks in the green because I don't see these as, life-changing companies. I don't see these as disruptors. I just see them as traders, getting a little FOMO, running them up, taking some 5, 10% gains. I just don't see the disruption, okay? Now, if we take a look in the red, we go down, we get past all these China stocks. There's some high-quality companies that are selling off today. If we scroll down, Skills, Snap, Neo, Open Door, Nvidia, SoFi Technologies, once again, 1%. This thing has been red for 5 weeks. So there's a lot of high quality companies, growth stocks that are getting smacked, but we could see some big moves heading into earnings. So those are the two updates for today, the China crackdown and then the crypto bounce back. Now, guys, I created this chart for you to really give you guys an understanding of valuations in these growth stocks. And this is actually pricing according to Wall Street analysts. And remember, the biggest thing we want to look for before we get into anything like margins, EBITDA, and stuff like that is price to sales. How much is the company producing in revenue the current year compared to what its market valuation is, okay? And we're going to take a look at about 7 companies right here. So we can see that Snowflake is trading right around 75x sales. Growth is really good at 80%. Tip ranks, this is the TR, this is the tip ranks. These are the professional analysts. They have about 4% upside. So there's no wiggle room in that stock. Lemonade, 54x sales on 120 million in revenue. Growth is decent, 28%. They have negative 25% downside on tip rank. So these are trading really, really high valuations. Cloudflare, 53x sales, 616 million in revenue. Growth is really good, 51% growth, 33 billion market cap, 13% downside on tip ranks. Datadog, 37x sales, 890 million in revenue, 51% growth. As you can see, these are all amazing growth companies. 33 billion market cap, 4% upside on tip ranks, barely any wiggle room. And once again, Palantir, Snapchat, and DocuSign all trading right around 30x sales. Growth is all in the same ballpark. Look, I line these stocks up with the exact same growth, 51%, 60%, 57%. These companies, guys, as you can see, have no upside at all. Snapchat, a little bit, but all the other ones, no upside. So these are the valuations 30 all the way to 75x sales. So this comes to, maybe an average of like 40x sales, 35, 40x sales, okay? We can see SoFi right now is trading at a ridiculous discount to all of these different sectors of growth stocks. We have everything. We have cloud, we have insurance, we have more cloud, cloud, we have technology, e-signatures. So every different, sector is on here, and they're all trading at significant premiums, guys. 30, 50, 70x. So we're trading at about 12x, okay? The bearish case is SoFi is a bank stock. So bank stocks, all trade at like 5, 10x sales. In my opinion, bank stocks, are going downhill. The growth is not there. They have not had significant growth in the past 5, 10 years. Their business model, requires mega capital for, properties and stuff like that. And SoFi is a one-stop shop, offers, brokerage, stock trading, is going to be offering options trading in the future, mortgages, student loans. I mean, the list goes on, guys. They offer products all across the board. It is the one-stop shop to get your money right. We're trading at 12x sales, guys, on 1 billion in revenue. Growth is pretty much the second highest, behind Snapchat and Snowflake. The growth is insane. 58% growth. As you can see, the tip ranks Wall Street Analysts, which it only has two at this time, has 75% upside. And guys, when this stock has multiple earnings, I believe the upside might stay the same because I think the stock is going to come up. I do not think this stock is going to stay in the same ballpark. I think the price targets are going to continue to get upped as the SoFi stock gets up. So compared to its growth, compared to these other growth stocks, we go with the lowest valuation in these companies. We'll go with like a 29 to 30x, right there with DocuSign. They should give us a price target, right around $40. So if we plug in the outstanding shares, which is right around like 740 million, $40 price tag. So this should get us to like a 29 billion market cap for 40. So there we go. So right around a 30 billion market cap at 40 per share. This is the lower end to, 7 other growth stocks, guys. Could go a lot higher if big money institutional investors buying heavy along with retail. This could get up to like a 40x multiple, potentially 45. So my personal price target right around, Super Bowl, New Year's, with 2 earnings reports and bank charter approval is right around $40 to $45. I love when Motley Fool, sends out analysts putting out articles because you rarely see this on SPAC stocks at all. It's almost like they're hiding these stocks from the public, pretty much trying to just vanish SPAC stocks off the market. 3 reasons to buy the dip on SoFi. Key points. SoFi has an app that lets users manage all of their finances in one place. The company is rapidly growing and has lots of opportunities in the banking industry. If SoFi continues to execute, this stock could prove to be a bargain at today's price. I would totally agree. Growth is accelerating. SoFi invests to buy stocks, trade crypto, and automate investing. SoFi Money to deposit, save, and spend your money. SoFi Relay to track and manage your credit score, spending, and personal finances. SoFi Loans for borrowing via credit cards, personal loans, student debts, and mortgages. SoFi is currently the only company with A to Z offering with a single app, which sets it apart from traditional banks and other fintech companies like a Square and PayPal. A bank charter could improve profitability, as we've looked at multiple times on the investor presentation. It really ramps up the EBITDA for the year. The U.S. financial services market is worth more than $1 trillion, but competition is intense from both traditional banks and fintechs. Banking employs roughly the same business model all over. Money is lent in return for interest, so lowering the cost to acquire customers is a necessity. SoFi and other fintechs don't have branches and overhead like traditional banks, so digital banks have much lower customer acquisition costs on average. A traditional bank pays between $1,500 to $2,000 to acquire a retail banking customer. In comparison, SoFi pays just $40 on average due to its digital presence and ability to cross-sell products to users from within its app. That's what I've been talking about, guys. Their customer acquisition cost is very, very cheap compared to these legacy banks. That's why growth is accelerating so fast. Galileo makes SoFi diverse. In 2020, SoFi paid 1.2 billion to acquire Galileo, a payment software company that connects bank to credit card processors. It provides important infrastructure for many of SoFi's fintech competitors, including Robinhood, Chime, Monzo, Vero, TransferWise, and others. Galileo is best through all of its toll road that benefits from the growth of overall fintech space, which SoFi now benefits from. Galileo is growing rapidly with year over year account gains between 130 to 135% over each of the past 3 quarters. It now has 70 million accounts, growing almost fourfold from just 2 years ago. It currently contributes roughly 20% of SoFi's total revenue, giving investors both diversification and exposure to the broader fintech industry. And remember, guys, I continue to talk about price to sales. All these analysts are going to continue to bring it up. And look at this. It has happened again. Read this part with me real quick. SoFi is forecasting 58% revenue growth in 2021, hitting 980 million for the year. The stock market's market cap of 13.2 billion values it at a price to sales ratio of 13. It trades at a premium to traditional banks, which have low single digit price to sales on average, and also to Square, which trades at a price to sales of around 10. So, guys, that's what I'm talking about. The price to sales. Okay, I believe it's right around a 12x right now. So the market cap's at 12 million. But look at these companies right here. They're trading at 30, 37, 53, 75. And the growth, SoFi is second highest growth out of all of these companies, behind Snapchat and Snowflake. So, guys, you're getting a great deal for a growth stock like SoFi right now. Once again, if you want more in-depth analysis on the SoFi stock, if you scroll back a couple of weeks to my earlier SoFi videos, like here 3 weeks ago, I do more in-depth analysis on SoFi if you want to get, further grasp of what the company does. And only if you feel this video gave you a better insight on SoFi stock or the overall direction of the stock market, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming out. You don't want to miss it. I hope you have a great day.